Yo, yo, yo. We got volume.
Hello,
Hello. Hey there.
Matt. Can you hear me?
Yeah.
Matt,
Matt? Yeah.
for some reason I can't hear you.
Hang on. How about now?
That may be my fault here. Let me make sure I got everything turned up. There we go. I got you, brother.
Good.
That was my technical difficulty from having my headset on the floor too long.
Got a footprint on it.
Yeah, so I flew in late last night from the Montreal Wood Convention. Boy, are my arms sore.
Oh, gee, that's old.
But
Gee.
it's funny. So anyway, let's do the quick intro. Welcome to Lunch with Lumberman. Matt Lehman, Lehman's Lumber Guide. Ashley Buckle, MX Lumber, Digital B2B Exchange. Matt, we had a good time up in Montreal. And I got to tell you, everybody that walked up to the booth that watch our show, your show and my show, and absolutely get a lot out of it and love it. You've got a really good following.
Cool. Good. I don't know those people up there, so that's good.
Well, you have a good following, and you have some mill people that also don't like our show sometimes, right?
Oh, that's the history of my career. I'm not a mill fan.
But
A fan of the mills.
but you have some mills up there too. Our friends in some areas like New Brunswick that absolutely love you too, right? So I mean, look at one of the things is that people say about you is you put it out there every day, and you've been right a lot more times than you've been wrong, and they like the fact that you hang it out there, and I think that was pretty cool. From people that were 20 years old just in the industry to people that are 85 and have been in the industry forever, love listening to you talk about
Yeah,
stuff.
from your age to my age, right?
Yeah. Yeah. But so I was just gonna, before we jump into what we wanted to talk about, so what I brought back from the convention, I always like to try to ask questions where I think people are, and take something back. And I have to tell you, so here's what I came up with. For the last 2 years, it's been a great market. In many cases, some of these mills, and God bless them, have made more money. So we had a big market, and one mill told me they had a big market in 2018. They made as much in 1 month than they made in the whole year of 2018, right?
Wow.
So and listening to some of the panels up there, some of the mills were able to run their not tier 1 mills, they're very low efficiency mills, and get away with doing whatever because the price allowed it, right?
Right.
Well, we're not there anymore, right? We're starting to come back the other way, but a lot of people are still optimistic, but and still very bearish, but they think there's going to be a big bounce. But there wasn't really. I guess I would say that everybody's coming from a big hangover and are optimistic the party's going to continue. And I had a hard time reading anything into it or coming up with any real idea of what I think going forward. And maybe that's what we could talk about here today, if that makes sense.
And I think the reason is they don't know. And if you think about it, that's what I want to talk about today is that there's no way that you can know, because if you think about what's happened over the last 2 years, we've been in a first ever 2-year, $4 trillion government sponsored spend fest. And people have done what people always do, and that is indulge themselves. And they've spent. And the inflation that we have in the market right now is a result of $4 trillion of free government money, party money. It's just jacks up the need for everything. And when you think about it, the entire last 2 years has been, I believe, 100% COVID induced. If we hadn't had COVID, we wouldn't have had the beginning of the panic where everybody liquidated all their inventory, and the pipeline got basically empty. We wouldn't have had the stay-at-home panic frenzy and the flight to get out of the metropolitan areas into the suburbs and the housing boom. We wouldn't have had the stock market appreciation where the millennials and everybody else has got equity in the stock market. It's got all these paper profits. We wouldn't have had the savings rates like they are. But the thing is, that party's now over. We've been talking about trying to find out what's the new normal, and you can't look at the last 2 years and say, let's figure out what new normal is based on the past 2 years, because that was just a freak show, and
Yeah.
it's gone. And more than anything else, this week I've heard people say that this feels more like pre-pandemic, just the last couple of months than any time in the last 2 years. It's got normal. It's like, yeah, business is slower, but it's not dead. It's just slower. It's getting them. It's almost like more manageable. And it's in the supply chain disruptions. The logistics is going to take care of itself. Think about where wages are right now than where they were 2 years ago. I mean, they're probably double for most low income people. I mean, Amazon's talking about $22 an hour. McDonald's is gone from $7 to $15. I mean, and everybody's used the new wages that are into the market right now are not going away. I mean, a company can't go back and say, well, things aren't so good anymore, so I'm going to have to cut your pay by 50%. So that's going to mean less corporate profits. It's going to mean I think it's going to mean reinflation once we get the inflation kind of settled under control and realize that we can live with 4%, 5% inflation or interest rates. We don't have to have 2% interest rates and we can live with 4 or 5% inflation. It doesn't have to be 0%. So I think
look, it's I think you could talk about the logistic, and that was one of the big topics of conversation up in Montreal was logistics, right? And from a mill perspective, some of them told me it would take 2 years to fix. Some people told me it's already getting fixed. So I think that one of the big components of the logistic issue is labor, right? I mean,
yeah.
And now I will tell you this, talking to Matt Beamer and some other people yesterday, the logistic issue, it's easier to ship some trucks out of these mills that were historically shipping cars now. So, you start shipping trucks at a cheaper rate, even with or the same rate as rail will catch up real quick and figure it out, right?
Yeah, we talk about logistics and how it relates to lumber, but if you think about a general economic slowdown, that means there's going to be more truckers available to carry if they were hauling boxes before or vans that they can carry flatbeds and carry lumber. I mean, a driver's a driver, and if he's got a rig, he can hook it up to anything and carry it. But if we're going to see a general economic slowdown, then that's going to mean less product demand throughout the entire system and more availability of truckers.
Yeah.
So I think we're going to see we're just going to see the reset's going to be back to what the old normal was, and we're going to get out of this freak show that we've been in for the past couple of years. When you said people don't know what to expect, how could you possibly know what to expect when you've lived off of the government for 2 years and had this free money and just you think of all the toys everybody's collected, extra cars, SUVs, ATVs, boats. Now we're back into this is going to be a big year for service rather than products. But I think by the time we get out of this, get out of the summer vacations, we're going to be back into people spending that extra money that they've got on inflation items like food and bread and vacation, eating out, still popular. But I think a little bit of inflation is going to stick with us, and we're going to stay just. I think we're just going to find ourselves at an elevated level of spending, with a little elevated level of interest rate, a little bit elevated level of inflation, and that's going to be. It's not a new normal. It's just a little bit elevated level of what we're usually used to.
Good. So I was going to say, Michael Shepard, greetings from Arkansas. Greetings, Michael. Todd Kellicote, hello from Shiloh, Ohio. Earl Heath, greetings from Vancouver Island. Earl said suppliers, buyers, really everyone I talked to says that the tone in the market this week remains very uncertain. Exactly what I saw up at Montreal. No one has any confidence in the direction of the market, so no one is making any moves. Yeah, that sums it up real good, Earl. I don't think anybody has an idea on it. Gray Skipper, good afternoon from the heart of the Pine Belt, Fulton, Alabama. So yeah, that's a good point with the new normal, Matt. You
You
want to
know,
break?
the good thing about uncertainty is that it takes away volatility. So you
It
don't see
it
anybody.
it absolutely
That's kind of a good thing. We need a
it
break from it.
yeah, it absolutely takes away uncertainty, Matt. And I think you have said it. Greg Riley has said it. Is I think probably what we'll see the rest of the year is we've seen the high of the year. You're going to see lower highs, lower lows. Everybody has this line in the sand. So one other thing I saw up there is we talked about consolidation. I think most of the consolidation we can agree has been done in Western BC. Uh, there's still mills being built in the Southeast. But where the consolidation is now going to happen is in the eastern part of BC, where there's still a lot of smaller mills, and you'll see a lot of stuff developing over there. But everybody, if we're just talking about price, one of the things everybody keeps bringing up is $600 a thousand, $600 a thousand, because they feel that's the cost of production in BC. Which okay, there's
Irrelevant.
it's irrelevant. I mean, it doesn't mean because there's this magical line in the sand it's going to go to 600, touch it, and bounce up. It may, because that's a psychological number, but it could go to let's just throw some. It could go to 300 and sit there for 2 or 3 months.
Sure. I mean,
There's no
the lumber market has a history of you know the break even points for a mill is just a data point. It
right.
doesn't. It's not a magical marker for when mills can do more, can do less, whatever. These guys, they run balls to the wall all the time. They flat out all the time. That's their job. I remember, everybody probably remembers Joe Heath from West Fraser. Joe used to get aggravated because I'd say something about production. He said, "Look, I'm going to tell you again. We're in the business of making lumber every day of the year. That's what we do. We make as much lumber as we can. Price is not an issue. We make lumber all the time." And that's just is the hard thing for for those of us that are like brokers trying to, like, well, I'm trying to make $5 a thousand on a truck. It's all about making money. But for mills, it's running. They're there to make lumber, cut trees, turn it into lumber, and it's kind of like however it turns out is how it turns out. Did we
And
make money? Did we make a lot of money? That's just the way
and
happened.
let's not forget, and good for them. If you look at some quarters, some of these mills almost made $1 billion in a quarter off of they have a war chest built up to run, right?
Yeah,
For the most part. David Stalkop, did I say that right? Stalkop. Hi, Matt.
yep.
Hi, Matt. I am seeing that people are spending any extra money on experience and not home improvement projects right now. Any prediction on how busy the DIY market will be this summer? I will tell you this. My wife and I were talking this about putting a brick paver patio on and making up some stuff, and instead we decided that we're going to go to Portugal or do something like that instead of putting money into the house this year.
Well, we've decided we're going to go take an extra trip, and we're going to do a patio. We're going to do both.
Yeah,
Right.
that's all right.
So we're not holding back. But I think to David's point there, the service kind of thing that people will do, the experiences that people want to do, those things are already paid for. Those things are already bought, paid for, or on a credit card, and probably they're already paid for. So I think the impact on the DIY is going to be, I think we're going to have a more active late summer after the holidays, after the vacations, because people are going to come home and they're still going to go like, I still got something. I still want to play. I still want to do something. And if they've got savings, the likelihood is they don't have a lot of credit card debt, or if they're going to get their credit card debt paid off. I think that for the lumber market, it's going to be what it typically does, just like the FTP show. It's going to go down into about August. Then we're going to reverse, and I think because of how hard we go down, I think we have a really strong recovery. Everybody seems to be concerned about the completions of homes. There's a lot of, I saw a thing on CNBC a little while ago that they were talking about builders walking away from uncompleted houses, and you pick a neighborhood where you got a house where they show 8 or 10 homes that are halfway finished and they walked away from them, as though that's the norm for the entire industry. But that's not what the norm is. There are pockets I've heard all week long from people say, like, some cities are real busy, some cities are like dead in the water, depending on where they are. But it's that kind of confusion that everybody has, not knowing, where's the hot spots, where are the cold spots, because there's no rhyme or reason to it. But
So I listened to Home Depot and Lowe's earnings last week, and Home Depot's quarter looked good, and they had a good outlook for this month. And Lowe's, I think they said there was a little bit pullback in their home and garden improvement and all that type of thing. And they're expecting that to get made up again. But
have you seen their home and garden section?
I have not. No, I haven't.
Holy cow! It looks like they got the mulch and potting soil markets cornered.
Yeah, but it was interesting. They were blaming not blaming. They're talking about supply chain on some of it, right? But I mean, don't you think like a Weber grill or a grill? Hasn't everybody already bought one in the last 2 years? I mean, how many of those do you want to go back and buy again?
I think the home centers are just trying to guess what's going to be next. They missed the deck and the fencing summer. And then they overdid it last year, so they're thinking like, where's the consumer going to spend their money? Because those places are packed full of people. You go to Lowe's and Home Depot, they're packed full of people, and you see a pickup truck. Well, there's a guy that's got eight pieces of 2x6s in the back of his truck. So I guess lumber's moving. But
one thing that they did pick up, I heard this from somebody, and this makes a lot of sense. So a pro user is somebody that buys material that they don't put in their own house, right? So over the last 2 years, when Depot and Lowe's sometimes had, I shouldn't say more access to material, a little bit different than other people or other items, they were able to draw some more people. So I can see that they drew some more, pro users into their yard. So that probably definitely reflected. Let's bring up the FDP real quick. And just because you were talking about that, to show a little bit about what you mean, Matt. And, I sat there talking to one mill yesterday, and he likes looking at the FDP. He goes, how did he put it? He goes, we were speaking American and French Quebec together. So the way I understood it is he said, Matt has a lot of things he puts together, but at the end of the day, I think when he combines them all, his diagnostic is pretty good, right? So let's talk about this FDP right here. When you're saying you think it's going to go, this is the 12-month 2x4 composite, and where you think the FDP, where the prices are going to go down, Matt. Maybe you could tell everybody, because Jory said we have almost 100 people right now live across the different platforms.
Well, pay attention, folks. This is going to make you some money. We talked about it back at the FDP number 15 that run up from 15 to 21 was going to be a miss. That 21 was going to be a miss, and the market was going to turn early, and that was probably because of the preparation that was done in March and just the expectation. I go back to the one thing that we said last year when the mistake that builders made was telling everybody, just buy me some lumber, whatever you do, don't run out. And still dealers have this they still pound in their head today that they cannot run out of lumber. So what they're doing is they've got excessive lumber on the yards, and we perceive it to be underbought inventories, but based on what the builders said they're going to do this year, spend the first third of the year on starts, the second 2/3 of the year on completions, and that's exactly what's happening. There's just listen to them; they'll tell you what's going to happen. They're going to spend the first third of the year using more framing, and the second third of the year using less framing. So we call that early turn. I said it was going to be either week 19 or 20, and I think it turned out to be week number 19 when the early turn occurred. And the next FDP is coming up at week 21, so that we will call that an acceleration point where the market will accelerate to the downside. And normally I say don't look at the velocity of those moves, just look at the timing of it. But on the other one, on the other FDP chart, I've got a V session line drawn that basically goes down from week 21 down to week number 31, that bottom, and then reverses and goes right back up. And I think that the fall is going to be very good for lumber because we're going to get underbought. Mills are going to get a place where they're going to be double stacked for stuff that they've got still unshipped wood, but they're going The mills are going to accumulate. The inventory is going to shift back to the mills through the summer. It's going to get underbought. There's a little hitch there. You see about week number 28 or so. It's a week, and normally we get a bump around that time. We talked about this last week. It's just preparation for vacations in July when buyers are going to be gone and going to be out of the market. Mills are going to be down for extended vacations and for maintenance. So we get a little pop just then, but that's not going to be the reversal. The low's probably going to come in August this year, and I think we're going to be surprisingly stronger in the fall when we get all the inflation things taken care of, and when there's uncertainty, like you said before, people aren't going to prepare. They're going to be underprepared.
Hey, Matt, one thing I want to bring up right now is talking to mills and some of the people that I know that are pretty intuitive brokers. People need to buy stuff along the way. And right now, you can put a bid into the market, and they're getting mills and customers or resellers are cutting deals on things. So if you just look at print right now, I could tell you like 104 5/8 Great Lakes. I was talking to guys yesterday, they were buying $150 below print, right? So there's deals to be had out there. Kind of tagging on to what Matt's saying here is, as this thing falls, that you still need to keep the store shelves stocked. Don't think that you have to pay a print number, right? Because everybody that has contracts, that's what they're paying right now, right?
Yeah, I got two thoughts to add to that. One is that the print is still the Bible for the numbers. And if you can wait until after that midweek print or after that Friday print to buy, just delaying your purchase by a couple of days makes your seller more enticed to take your offer once they see the momentum going with you. If you're seeing right now 2 and 3 week delivery for logistics, you can expect that that's going to significantly change too. That 2 week shipment is going to turn into 1 week shipment. So unless you can verify if you're in a spot, we're in a lane, for example, where logistics is a problem for rail or for truck, you're just at some, like Steve Val says, he's up in the sticks. He may have a difficult time getting trucks to come to Martin, Tennessee, but if you're not in a place like that and you can get good shipping, then don't buy 2 week wood. Reel it into 10 days or reel it into a week, because that could, in a market like this, that could mean 50 or $100 1,000 a lot of times. So just play it tight.
I want to bring up Clinton Fetter's comment, because Matt, that goes right into the comment, the bullet point that you talked about today: head fake rallies with deep stop market corrections, right? And look I'm full disclosure, I'm not a stock market professional at all. I can lose money just like anybody else. But he said, I think the stock market performance may have more of an impact on the near future spending than the extra money, which I question a little bit, in the hands of low to middle class wage earners. It's how people that have money decide to allocate or pause.
Well, it's statistically only 10% of the population even invest in the stock market. It's amazing how you can have multiple TV shows talking about it all day long, and it pertains to 10% of the people. But still, people watch it. And when you hear conversations that the stock market's crashing, it's falling, it's going to make new lows. I don't trade stocks because I, just like you, I could pick anything in the world and lose on it. It doesn't make any difference.
Yeah,
but,
no doubt. No
doubt. But it's still an indicator of the general economy and how big companies are doing, and it affects. When you hear things like Walmart and Target and Costco are having record bad months or bad quarters or disappointing earnings or disappointing sales, it's people take that, they whether they trade stocks or not, it means something to you.
You know what? One thing I want to bring up is your FDP on Southern Pine, Matt, because I was talking to one of my buddies down in South Carolina yesterday, and he was telling me how much of a discount he's buying on pine, right? And he thought something was going to buy, but we're talking numbers that were 100 or so off from last week. Does that make sense?
Yeah.
You're more dialed into pine than I am, but maybe we could let's see if we can bring that up. I'm showing 2 screens, but let's see if we can get one. Anyway, the chart on there we go. The one chart, there it is. Kind of shows the pine market, Matt. What are you hearing on the pine market? Here's one interesting thing. Again, Southern pine is moving more farther north. I had a meeting with one of my Canadian friends up there, and they are bringing southern pine again into Canada. But he said, "Don't tell anybody." Right? Like, think about that.
That's like I voted for Clinton, but don't tell anybody.
Well, is they bringing southern yellow pine into Canada, right? Just because it makes sense in some applications. But what are you seeing on the southern yellow pine market here?
Well, I think the biggest thing that's happened in the pine market in the last 2 weeks is it's lost its discount to everything else. I mean, just last week we saw pine fall like about 10, 15 bucks, and then spruce fall 150 bucks. So all of a sudden that big spread between spruce and pine was just wiped out. The same thing happened with the last print on Western dry fir. It wiped out the discounted print. So now everything's kind of par. But I saw a news article this week in Enfield, North Carolina. Roseburg is breaking ground on a new sawmill in Enfield, North Carolina, and the southern pine production is coming online quickly. It's there. It's plentiful. And one guy said, he said, his contractors don't mind using pine anymore because they're using nail guns. They're not using hammers.
Yeah.
That you stick a nail gun up there and bam, it's a 2x10 or a stud or whatever is in the wall. It may be a little heavier to pick it up, but you're not lugging 2x10s and 2x12s up to second stories anymore because you're using cranes to set trusses with. So all the old wives' tales about why you don't use southern pine are going away. Just the availability of it is so much better. And
I was talking to a guy. He basically said I was talking to a framer up in Wisconsin. I think I told you this, and he said, "Hey Ash," he goes, "I've been a framer my whole life." He goes, "We don't care if pine comes out on the job or spruce. We just know it may be a little bit heavier." He goes, "The people complaining are the people that don't stock it at their stores or have historically in the back of their head always complained about it." But he goes, as a framer, if we get it out there, we'll use it, especially at a big discount. Shane brought a good quote up here. Shane's in Northern Indiana. He said he switched all of his commercial projects supplying this summer to southern pine. This is a great comment, Shane. Versus supplying this summer to southern pine versus RFI to architecture. Rather than 50-50 southern pine to SPF, I'm now about 90% southern yellow pine right now in my purchasing. I mean, that's a big change, man.
That is, and that's something you don't have to argue with an architect about because southern pine's stronger. So you can say like, I'm bringing in a better piece of lumber, structurally a better piece of lumber. So it's not something you got to redesign.
Well, not only that, is logistically, it's closer to the source if you're over there, so you don't have to wait 2 months for a rail car that was supposed to ship, 2 months ago.
Yeah, and you look at where Shane's talking about too. He could buy all the way from East Texas to South Carolina, and to Indiana. He's got this great big swath of production all the way from all across the South, so he can play those cross market opportunities from East, West, and Central, and there's just so much. It's just logistically, it's better, and it's gonna get better. So I think we're going to see more and more people doing like what Shane's doing. It's just a
great comment, Shane. That's a great comment. And let's bring up the framing composite index, because that's one thing we haven't looked at in a while. So here's the framing composite index, and just look at that chart. What stands out on that to you, Matt?
Well, look at the red line and the black line are like right on top of each other, which basically means that the price that builders are getting is now reflective of the price that their suppliers that the LBMs are paying. So they've had a chance to average down the prices. They're getting lower. Lumber locks for June are going to be lower than they were in May, and it's trending lower. So we've got the cost per square foot's getting back in what's that $25 range back from. Remember last year we were in the $70 a square foot range. It was just like insane. But lumber's gotten to the point that lumber's not a deterrent for building a home anymore. All the home builders I talk to say they've got their margins are still good. They've got plenty to put into whatever the extra fees are going to be or the land, and I kind of gather from home builders that they've got a little room to give back on some pricing just because the margins. some of the products coming back in price, like lumber. There's still some things that are tough to get, like brick. I've got one guy that's a builder that's planning out for. He says he's going to build the most starts he's ever started before in October this year, and the reason is he's got an 8-month wait on brick. So what he's done is he's scheduling his homes to be when he needs his framing based on when his brick is going to be. So he's going to spend the next several months completing the ones that he's got, and then he's starting to he's going to hit the ground running in October with record starts again.
Well, think about it. We have the most homes under construction right now that we've had in quite a long time, right? Currently under construction, and the new home sales number of single family came out this week, and it didn't seem real great.
No, it's down like 16%, 30% over year. But
so I think kind of what you and I have been talking about, how is that bird's mouth supply demand housing where we have this many permits that we want, but we only have this many completions. I think we're probably going to kind of come into line here. Not saying that we're going to not rip back up to 2 million homes, but right now the market's doing what it should do. It's adjusting to where it can actually build homes at, right?
Yeah, and to get back to the very opening statement, this the phenomenon for the last 2 years is I'm using 100% COVID induced as an exaggeration. I'm sure there's some other factors, but without COVID, we wouldn't have been in a situation with supply, logistics, and labor. And now with that, if that does go away, it hasn't completely gone away, but it's certainly in better shape than it has been for a while. But we're going to have all this.
Steve Vowell said 24 lead time in aluminum clad windows. Said it's ugly out there.
Yeah, but Steve and everybody else, those things are problems that are existing from people not being able to produce what they needed to produce because of labor, and there's plenty of supply for normal demand. And when you get normal demand, which is just constant, which I think we're going to kind of settle into around 1.5 million kind of homes, I think we could get the completions up to 1.5 million, starts around 1.5 million, and then there's plenty of everything to go around, and we're just going to get. I think the things that we're just panicking over that are tough to deal with right now are like, if I would venture to guess that a 24 lead time aluminum clad windows will not be a 24-week lead time. When if you bought a 24-week shipment right now, you probably get it early.
Yeah,
and I think the same is going to be with that 8-month brick lead time. That's what it is now. But as you get closer to it, it's gonna cave in a little bit, just like lumber.
I heard an interesting statistic the other day, Matt, and I was gonna run it by you to see if this sounds right. How many second homes do you think there are in the U.S. right now?
It's probably a good way to look at it would be the same as when you go by a marina and see how many boats are out there.
Yeah.
That are sitting there just doing nothing. There's probably that many.
There's about 10 million. It said second homes, right? So so now kids don't have to move back into their parents' basement. They can move back into
their beach house,
second and third houses. Yeah, no doubt. Well, look one of the things I heard at the show was we really like you guys and we like your show. So one of the best things you can do to show us how you like our show is one, comment like everybody did here on the side, which gives everybody in the industry more transparency, that's one of the things they said this show was providing, a good place for people to come to. I had a kid come and say, I've been in the industry for 2 years and I come here just to hear stuff that people on my own trading floor won't teach me, right? Which is great. So in order to support us, we need your support. I sound like public television now. We need your support to use.
You're gonna get Michael Bublé tape to go with it.
So you can come to Matt Lehman at Layman's Guide to sign up for Matt's report. Matt, and I think there's a lot of your people. There's Matt at laymansguide.com. And for materials exchange, you can come to mxlumber.com. Sign up. Go to get started, register, and we'll get you on. This is a way. Many of these people that commented over here on the side have bought pine trucks in the last few weeks off of here. Many of the people up at the convention have sold stuff to people that they would never normally talk to. So we're a digital exchange that's bringing transparency and pricing delivered to you and kind of making a connection to people that would never see each other. And hey, every other industry is already doing it. let's stop being the grain industry from the 1970s and connect people digitally and start doing some things. But Matt,
I want to close. I want to
yeah, go
close
ahead.
with. I want to close with a big announcement. Everybody knows that we've been making a lot of transitional moves here at Layman's Lumber Guide, getting more into education. By the end of June, we're going to have a pricing structure that's going to make prices free for the entire industry. And it's good. They're going to be randomly prices 2x4 through 2x10s or 2x12s, probably 2x4, 2x6 in the east. We're going to cover eastern spruce, western spruce, dry Doug fir, southern pine, east and west side, OSB. But we've got a real unique program because we're going to start. We're going to offer those prices free on the website, and it's going to be can't divulge a whole lot of the source because it's in the works. But my thought about that was you can turn on the television and find out what the value of any stock in the country is, or just Google it. And I've thought for years that I'd like to make some way to make lumber prices free because they're not anybody's property. I mean, you guys all know what you're paying for lumber, and we've got a system working right now that we're in the process of finalizing. That hopefully by the end of June we'll have those prices at least we're not going to do specifies. We're just going to do random length prices to give you an idea of which way the market's moving for momentum and velocity. And really looking forward to that. So I hope to see you guys around for that.
That's great, Matt. I appreciate it, and thank you everybody for coming in during your during your busy time. And we're honored that you listened to us and give us your feedback. Looking forward to seeing you next week again at the same time, Matt. Thank you for showing up.
Have a great day, guys. Thanks, Ash.
You bet.